Hi, Vieira with the Stock Market Live.tv. Good morning. Today I'm going to address the US elections 2016. Bear in mind that the US elections 2016, what is going to happen or what has been happening in the markets until the date and after the date, it has been always planned months ahead here at Stock Market Live.tv, where you, as an investor in the markets, you were informed that the markets they were going to see new highs, and thereafter when to sell stocks, and in some cases when to reverse to the short side. Okay, so you were informed, for example, with regards to Apple. I do recommend that you watch several times the lesson discussion in detail Apple live earnings ahead of the results, the earnings report, as well as after the earnings report they were announced, since for 1,000 reasons you could see that I don't need to know the results, because the Apple share price, the fate of Apple share price was already given. Okay, so when people they think or they assume or believe that the share price is dependent on earnings, the share price is not depending on earnings, my friends. The share price is depending on plans that they exist ahead of the share price to or the company to report earnings. You have other example here, Facebook, that reported a good quarter and shares they plunged. All right, so those that they were buying Facebook at $134, today you have a tremendous loss. That is entirely your problem, it is not mine. But today the reason for my intervention is the stock picks that you have in the service in case Hillary Clinton is the candidate that is going to win the US elections. I think that eventually it will be the case by a small margin compared to Donald Trump. Okay, so there is already a plan, an article that explains which stocks to buy, and if you want to wait until then, until the results are out, which stocks to buy in case she wins the US elections 2016. Regardless of who is going to win, we already proved that you don't have any risk whatsoever, because we prepared all this in advance that is occurring in the US stock market. Today you had some earnings, the case of Facebook, the case of Fitbit. So here a junk rating in Fitbit ahead of earnings. This stock was downgraded to strong sell at a price above $40, so we were informed about it, as well as there was a complimentary live market call ahead of earnings in Fitbit, where I announced that I had a short position in Fitbit. And as a subscriber, if for some reason you had a long position, you were informed about it at $16.85, not to have a long position in Fitbit, since what matters is always long term. So junk rating in Fitbit, very large short position. Today you have live here on the tape a price below $9. Junk rating, it is very explicit. Crash, crash, crash. Junk rating represents crash. You had plenty of stock picks in the service with junk ratings. The case of Abercrombie, 1 million shares, $33, crash. I downgraded this stock for the first time at $77 when Wall Street had strong buy ratings and price targets in Abercrombie at $90, all right? So I told you on Apple that you were going down. If you maintain a long position, that Apple was going to lose $50 billion in market cap. If you have a long position in Chipotle, I all told you that you were going down. So you had to have a very large short position for the crash in Chipotle. And I repeat the same that I said before. Everything that is happening in the US stock market, it is according to plans that we defined here along, and we shared with subscribers many months ago. All right, I told you you are going to see new highs in the US stock market, precisely when Goldman Sachs said 3 months ago that stocks to quit the markets and stocks they were going down. I told you you are going to see new highs Goldman Sachs is wrong again, because they are wrong in every single call. Morgan Stanley precisely the same. You have the example in Morgan Stanley with the case of Valiant. They plunged the shares. They were upgrading to buy, all right? So plunged, crashed in fact, not plunged, is a different matter. Or the case with Goldman Sachs, the First Solar, or the case, I don't know, Caterpillar, whatever, that Caterpillar plunged when they upgraded and rallied when they downgraded. So, my friends, is always the same. Kite Pharmaceuticals, or a terrific opportunity for short sellers. Most Americans, they lost all their money by investing in Kite Pharmaceuticals or in Acadia Pharmaceuticals when I told you that these stocks, they were going down to crash. And this regardless of who is going to win the US elections 2016. But if you want to know which stocks to buy in case Hillary Clinton wins, you are already also informed about it, in case it works. Might not work, but we'll see. And in case Mr. Donald Trump wins the US elections, you can always call Goldman Sachs or Morgan Stanley to know what they have to say. That is entirely their concern. It is not mine. And bear in mind, live market calls here complementary. Downgrading to strong sell. I told you Mr. Carl Icahn had severe problems. He's going down. Chesapeake Energy, the case of Transocean, the case of Herbalife. Herbalife plunged $20 per share, or might downgrade to strong sell for the first time. All right? So good luck investing in the markets, my friends. I don't see any risk whatsoever. And don't forget about Elon Musk here, $188. And I was the first and the only person in the world informing you when to sell Tesla Motors. I had a former strong buy rating, and we changed it to strong sell for the reasons that you are aware, dedicating more than 50 lessons explaining why Tesla Motors shares, they were going down. While the Americans on earnings, they were buying shares at $215 because Elon Musk involved in accounting fraud. It is fraud, it is not tricks, it is fraud, all right? Though at accounting is fraud, period. You have 188, you don't have 230. Thank you, bye. The tape always tells the truth.